Hello and welcome to our latest market alert. Today I want to speak mainly about the Fed meeting, which will be happening tomorrow evening, and the impact that could have on several asset classes involving the US. And I'll also touch on the Brexit vote, which will happen this evening here in the UK in the House of Commons. So if we go on the calendar tab on X Station, you can see tomorrow, Wednesday 30th of January, have the Fed rate decision at 7 o'clock. It'll be followed 30 minutes afterwards by a press conference from Jerome Powell. Now, for the past few years, every other Fed meeting has had a press conference which followed, as we saw last time out in December, where the Fed raised rates. But from now onwards, they've announced that they'll have a press conference following every single Fed decision. So there's typically a Fed decision every 6 weeks, and after every one, there'll be a press conference, which means there'll be further chance for them to explain their policy, and also this could create further trading opportunities. So if we look at the charts, I want to start off with US stocks. We'll have the US 500 here on a daily chart, and you can see the last Fed meeting back in December, as I was talking about, is this one here. And we saw basically not as dovish shift as the market was expecting from the Fed Chair Powell during his press conference. And we break down below the lows of the year at 25.30, and in doing so, the market swooned quite strongly. You can see we fell over 200 points in the following 4 or 5 sessions. Since then, we've had a strong recovery, helped in no small part really by a speech that Fed Chair Powell gave at the start of this year, where he basically seemed to backtrack a little bit on some of those comments that he made in the December meeting, and this has boosted the market. You can see that 8 and the 21 EMAs are in a positive cross, and we're now back up around this level, trading 26.40 at present. Now, areas to look for going into this event, I think recent highs at 26.78, potential resistance, but if we do get above them, then there could be further upside ahead. On the downside, I'd say last week's low, around 26.12, is possible support, which also coincides with 21 EMA. If we do break down below there, then there could be another push lower. What I will say is it's also quite rare that after such a large decline, you get a V-shaped recovery without any sort of retest, pulling back down towards the prior lows. If you just look back to the start of 2018, for instance, when we had quite a large decline, there was a fairly rapid recovery, but then we did retest and we had to form a higher low a month or so later before the recovery ensued. So if we do break down below 26.12, then I think there is a chance we could have significant downside back towards this level. Now the US 30s, the Dow Jones, and you can see here if I've taken fib retracements from the highs all the way down to the lows, we've recently touched a 61.8 fib at 24,850, and I think there's potentially key resistance to watch. It's also broadly coincides with the 200 SMA, and yesterday we almost got a bearish engulfing candle. It's not quite textbook, but you can see there is clearly some resistance around this level. Now, unless we can get above here, then it does favour some sort of pullback, and if we drop below the 50% fib at 24,200, then again we could see another push down here and a retest towards this region around the lows. It doesn't necessarily have to go all the way down to the lows, but when we've had such a strong bounce around 3,000 points, beg your pardon here, then it wouldn't take much percentage-wise downside to move back and have a nice potential trade on the short side. US 100, similar to the US 30, you can see we've not recovered quite so well. So again, taking fibs from the highs to the lows, we're around the 50% fib retracement. Also further below the 200-day SMA, which you can see is up here around the 7,000 mark. And yesterday we got similar price action, almost bearish engulfing, not quite confirmed. And really how the market reacts to the Fed on Wednesday could be key in determining what happens next to this market. If we take out these highs, we can push up to the upside. But if we get a negative reaction and Powell does seem a little bit hawkish in his press conference, then we could see another retest back down towards those lows we saw at the back end of last year. Turning our attention to commodities, and there's been strong moves higher in gold in recent sessions. You can see we had this big strong push to the upside on Friday, which closed right on its highs. Since then we've had further gains in the last couple of sessions with higher highs and higher lows. The market is now probing some possible resistance around these levels that we saw previously, 1309, 1310. But if we do get above there, there's not really too much in the way of the market for another push and an extension to the upside up towards 1366. In terms of support here, I think 1276 is an area to look for. The last Fed meeting, we did see a bit of a rejection of the 200 SMA, but you can see the next day we got a big bullish engulfing candle, and that really sparked this rally. And since then, we've had significant gains to the upside and gains of around $70 US. Turning to FX, the Euro US dollar. The last Fed meeting wasn't too key for this pair. You can see here we had a bit of indecision, quite a long wick above, and then a bit of chop really for the next week or so. But just last week, as I was talking about in the market alert, we had the ECB meeting here in Europe, and you can see we got negative move in euro US dollar when we have weakness in a single currency, break down below this rising trend line, but then we got bullish engulfing candlestick here the following day. Now this could be seen as similar to the reaction we got in the Fed back in December, where we got a negative reaction initially, but then bullish engulfing and continued upside going forward. So I think whilst we do remain above the lows we saw last week around 112.90 and possibly even these lows from the back end of last year, 112.15, this market could be set to recover further. We do get possible resistance coming in around 114.55, but if it can get above there, then we can see back up towards these highs around 115.50 that we saw earlier this month. Last but not least, I want to talk about the pound US dollar. Now here, rather than focus on the US dollar side and the Fed, I want to talk about the pound. And this evening at 7 o'clock, we have another vote scheduled in the House of Commons on PM May's Brexit deal, or a Plan B. As you probably remember, last time out there was a heavy defeat for the PM. The margin of defeat was 230 votes. It does seem highly unlikely that she'll get enough of a swing to get this through Parliament on the second try, especially as her Plan B resembles very closely what her Plan A was. One of the important things to watch here could be amendments. There's a Cooper amendment which has been tabled by a Labour MP, which will essentially say that if PM May can't get her deal passed through the House of Commons, then she will seek an extension of Article 50 for 9 months, which would take us to the end of the year. This could be seen as pound positive if it passes, because it basically would reduce the risk of a no-deal Brexit. There's also a Brady amendment, which could see her gain some more support if it's passed. This would essentially see the Irish backstop pulled out and some rather vague alternative arrangements made. But this could bring more hardline Tory MPs onto her side, and that could improve the number of votes she'll receive. Now, just comparing the Fed that we got last month, you can see there wasn't too big a market reaction, but if we saw what happened when May's Brexit deal was defeated just 2 weeks ago, we did get this interesting price action. Similar to what we saw in gold and euro US dollar, actually we saw initial negativity, but then we got a big bullish engulfing candle, and we did push to the upside. Now, whilst May's Brexit deal being defeated, you could think it's bad for the pound. It's basically been taken as good news because people are seeing it as it's less likely that we'll have a no-deal Brexit. Now, this is a good example of following the price action, not trying to fight the market. When you do get this strong positive price action, it often reveals underlying strength or weakness, in this case strength, and you can see we continued higher going forwards. Now, levels to look for here, recent highs around 132.16, possible resistance, and in terms of support, the big 130 level. I think whilst we remain above 130, then the path of least resistance does appear to remain higher, and whilst there is much that could go wrong here, most things seem to be pointing towards a softer version of Brexit, which will likely be taken as pound positive going forward. Okay, thanks for listening, and best of luck if you're trading these markets in the coming days.